There's great panic in all the markets around the world. Today, after what happened in the United States, everything is plummeting. Not only did we have a huge correction yesterday, among other things, precisely on the S&P 500 in the American markets and others that were hit indirectly, today there's a further deepening, another few percent drop. What about Bitcoin? Surprisingly, the irony is that it hasn't translated too strongly. Bitcoin is still hovering around $82,000 to $84,000. Even this morning, the S&P dropped by a few more points. So, hypothetically, this indicates the strength of these cryptocurrencies, but only for today. Of course, I won't attribute any made-up stories that they're holding up very well, because we all know how the last 2 months have looked. The terrible. There's a correction that's dragging on. But still, when it comes to the entire crypto market, today it showed us a bit that it can indeed hold its ground, at least in terms of such an analysis, in comparison to what happened with other assets, which are simply doing very poorly. Today, as an interesting tidbit, I'll tell you, over $1 trillion evaporated, and within 2 days, $3 trillion disappeared, so 3,000 billion. This is almost twice the total market capitalization of Bitcoin, and behind all this is supposedly the most pro-market president in history, who was supposed to bring us great prosperity, namely Donald Trump. What's going on? Why has Trump suddenly become the executioner of our wallets? It was supposed to be different. I invite you to a quick capsule of material. Let's summarize what we know and how the last 2 days have looked, and what to expect in the coming days. First, going chronologically, on Wednesday evening, the President of the United States signed an executive order establishing reciprocal tariffs. And it was a historic moment. Trump essentially changed the global trade system that had existed for over 75 years, because the world hasn't seen tariffs this high in over a century, so it's truly absurd. And there are also voices saying that the current U.S. trade policy eerily resembles the mistakes made in the 1930s of the last century, which then indirectly contributed to the greatest financial crisis in history, the Great Depression. Back then, stocks didn't drop by 20 to 40%. Listen, they dropped by 70-80-90%. People were selling their children because they couldn't afford to support and feed them. So what is happening now, although it may seem like a tragedy to you, is not at all. It could be and has been much worse in history than it is now. And the situation is unprecedented in that there is a lot of uncertainty and fear in the markets. Yes, the fear and greed index for the traditional stock market is hitting 6 points. And look, in crypto, when we have a dozen or so, everyone is packed into their accounts. But 6 points, well, I personally haven't seen this indicator so low in many years. And before we discuss here, whether the USA will actually plunge into a crisis and how strongly it will impact the cryptocurrency market. And should we will ask ourselves, evacuate from this market, or is it already the end here? I will present to you facts, figures, and expert opinions to best describe the landscape of the market after the introduction of Trump's tariffs. And what happened with the prisoner, to put it simply, in layman's terms. So, generally speaking, on April 2nd, the president introduced new tariffs for all countries in the world, literally all of them. Trump set a 10% rate on imports from various countries, but also imposed significantly higher tariffs on over 60 other countries. Because these 10% tariffs are, listen, set to take effect on April 5th and the higher ones on the 9th. And such a tariff map. You have it in front of you on the slide right now. I'm showing it to you because, well, it's very important to realize how everything looks now. This day was named by Trump as Liberation Day, and looking at the market reactions, and what Wall Street was saying earlier, because he was speaking towards those, large financial entities that proverbially operate on Wall Street. And he promised that they would be pleased with his decisions. For now, it seems they are not, so maybe it's not Liberation Day, but Liquidation Day. At least for many people, specifically investors who were playing the longs in recent days, but more on that in a moment. So for the countries that the administration accuses of actively blocking American goods, the penalties are very high. And about 60 countries will be subjected to individual tariffs, which have been calculated at about half. Tariffs and other barriers, which have been calculated in such a way that if they impose any, restrictions on the USA, then the USA imposes about half of such tariffs and other barriers, which the administration has calculated are imposed on the USA by those countries. So the main trading countries that have been affected by these adjusted, let's call them, tariffs include China at 34%, Cambodia at 49%, Laos at 48%, Vietnam at 46%, Sri Lanka at 44%, Thailand at 36%, and a few other countries like India, Japan, the European Union as a whole at 20%, and the Philippines at 17%. And these tariffs will come into effect on April 9th. A 25% tariff will also be imposed on all foreign cars, and this tariff went into effect at midnight on Thursday, April 3rd. So President Trump called the day the tariffs were implemented Liberation Day, arguing that these measures will bring back industry and jobs. specifically jobs to the United States, also fighting against what he considers unfair, even harsh, measures imposed by others on American goods. And all of this is combined with a series of similar actions since his return to office on January 20th. It marked the most dramatic escalation of tariffs in the U.S. in almost a century. And after the tariffs announced on this Liberation Day, the weighted average rate of tariffs in the U.S. rose to an impressive 29%. And even the Smoot-Hawley Tariff Act from the Great Depression era in the 1930s never anticipated such high tariff rates, because the current tariffs at 29% are higher than during the Great Depression, when such an act was introduced in 1930. And it imposed high tariffs on imported goods, which was simply aimed at protecting domestic producers. So if there's John Smith here, who produces, milk, in short, or processes it there, or produces oatmeal, then it's clear that for the good of the country, hypothetically, it shouldn't be imported, but should come from local sources, harvested from native fields here and processed by people who will gain employment as a result. And the best choice for the country is to export many things, due to the fact that there is a surplus of various goods and thus profit from exporting. Goods, for example, that are unavailable or more expensive in other countries abroad, and less is imported. This is also how the strength of a given country is assessed. And those tariffs, from decades ago, almost 100 years ago, were one of the factors that exacerbated the global recession, so they cannot be considered the sole cause of the crisis. But such a situation did occur, and one must be aware of it. Nevertheless, the similarity between today's rates and those from the 1930s raises concerns that these current protectionist measures might simply lead to serious disruptions in international trade and negatively impact the global economy, just as it happened in the past, because these high tariffs introduce uncertainty, which is one of the biggest threats to the market. Especially, look at times when inflation is starting to rise again. And this uncertainty after the introduction of the CU was visible everywhere. For example, the U.S. Economic Policy Uncertainty Index is reaching its highest levels since the pandemic crash. And in most cases, when this index was at an all-time high or close to it, a year later, the stock market still experienced growth. During the pandemic, it was as much as a 63% increase. The S&P 500 is underperforming the most since 2009 compared to the MSCI index, which takes into account markets from around the world, except for the USA. Also, as an analogy for you, I'll tell you an anecdote I saw somewhere today. A chart showed that since 2021, looking at today, the Warsaw Stock Exchange, specifically the WIG20, has performed better than NASDAQ when comparing these last few years. And some of these companies have particularly outperformed the tech companies from the United States. Of course, not for most of the period, but in the last 2 days, it has a bit. This chart, it overlapped and aligned. So, in short, as you can see, we have a combination of huge uncertainty and declines in the American stock market, which always leads to problems with cryptocurrencies. It is also correlated, especially when tech companies are doing poorly. Bitcoin, for example, also does poorly. Take a look now at how the NASDAQ chart looks over the past few weeks. It's no surprise that Bitcoin is also performing worse because when the NASDAQ rises, for example, when things are good, altcoins often rise even more strongly. And that's the analogy. These are risky assets at the very end of this food chain, at the very bottom. However, when they do take off, they have the highest percentage growth, but it's also the most risky, with the smallest chance over time. If we look at it historically, the data tells us that these were the moments when it was worth making purchases. I know you'll say, okay, Merrick, you said before that it's worth making purchases. Yes, that's true indeed. I also did, but as you can see on Telegram, I gave an update. I sold some assets from other markets that I had been accumulating in recent weeks. Did I gather some cash from the business to place those last orders, just in case they come to fruition if they get executed? Besides what I recently bought, it would be really nice and pleasant because these are low prices. They could hypothetically be even lower if we were to drop to those $70-something thousand on Bitcoin. Let's hope we don't drop any lower. And the tariffs caused quite a shock in the financial world. Among others, the International Monetary Fund reacted. The head of the IMF even issued a special statement on this matter. She said they are analyzing the macro consequences, but it's clear that this is a serious threat to global. In fact, the prospects during a slowdown in growth. They want to act and are urging the USA and partners to work constructively to remove these trade tensions and reduce uncertainty. All the major world indices are also reacting. It's not just that cryptocurrencies are falling. We had declines on the American Stock Exchange, but also on the main European, British, German, and French indices. Asia also reacted with a correction the day after the release. The Japanese Nikkei fell by 5%. The Korean Stock Exchange is at a 2% loss. Investors were also hit even in Hong Kong and mainland China, so it's clear that the US was hit the hardest. But here on this slide you have The exact Bitcoin prices of the main American indices before and after the announcement of the historic tariffs are marked. And under the influence of the tariff war, the Nasdaq fell by 5.5%, marking the largest single-day drop since March 2020. This year, so there hasn't been a stronger drop on the Nasdaq in several years than now. To which Bitcoin didn't react as tragically. Going back to the question, how serious was the decline in the stock market? To compare the scale of the phenomenon over the last 45 years, right? We had 11,406 trading days. When the market was open, exactly that many. And only 29 of them had larger declines than what happened yesterday. So, well, the chance was small that something like this would occur. Literally, once every 2 years, not quite, every 1.5 years. There is such a strong drop as yesterday within a single day. Bonds also reacted because, after April 2nd, it's evident that bond yields started to fall, which is a significant signal. The most important thing for financial markets is the yields of these 10-year bonds, because their ILD is also part of the MMRE risk indicator, which I often talk to you about, Manarino. And currently, we are witnessing a significant decrease in risk because both the DXY, which is the dollar, and the yield on 10-year bonds are falling. So the question you're probably asking yourself is why it works this way, that declines in the DXY. And bond yields are ultimately considered positive for the stock market as well as crypto. Let me explain it to you. Firstly, the dollar is no longer seen as a safe haven, partly due to tariffs. It is losing strength, which is why investors will look for places where the purchasing power of dollars won't decline. As for the recently sharply declining yields, it's simply a signal that there are entities purchasing large amounts of debt. And the creator of this indicator, an analyst, reiterates that central banks, as well as commercial banks, are the biggest buyers of American debt because it's part of their strategy. They want to become the main issuers of debt, as well as the main buyers. It works both ways. It is also positive for the stock and crypto markets in the long term. Because the biggest crash started in the debt market, and now with falling yields, the great crash is not yet. On the near horizon, let's call it, hopefully, that's really, because here. The point is that if the yield on 10-year bonds falls, it leaves the door open for capital to move from the debt market to the stock market at the right moment. But okay, take a look at the example of how it looks on the risk chart. We have a very similar pattern to what we saw in the summer. Back then, risky asset markets were also going through a rough period, but at the same time, the risk indicator was falling. And now we see the same pattern. This is one of the reasons for me, simply why I am a buyer in this environment. Why? I add more, rather than pulling out and saying, okay, I'll take a 3-month break, come back, and it will be cheaper. There might still be a bit more, as we've been discussing, but we really have an additional negative sentiment here. Blood is being spilled, most people are panicking, and that's the truth. And the question is, what is the market afraid of? Now, how might these tariffs affect the US economy? On this topic, I'll listen to an expert, one of the best macro investors in history, Ray Dalio. Founder of the Bridgewater Hedge Fund, and with his long-term investment strategy, he has earned billions of dollars for companies. According to him, tariffs are nothing more than taxes that countries impose on foreign entities, but they are mainly felt by consumers and companies. Locally, in this case, in the USA. And theoretically, their introduction protects domestic business, but at the cost of reducing innovation and competitiveness, which in the long term lowers the quality of these companies. And tariffs also lead to a reduction in the trade deficit. What is Trump counting on, among other things? Here, because currently the USA, as an interesting fact for you, has a record negative trade balance. And, interestingly, also himself, Ray Dalio emphasizes that the introduction of tariffs during times of significant geopolitical tensions, and indeed, these wars between countries are not something unheard of. And sometimes it's the only option for the economy to respond well in the long term, just well. And in the United States, there has been a problem for years with so-called financial capitalism, which has replaced industrial capitalism, which has contributed to the current economic and political position of the United States. And Trump simply, he wants to become independent, let's call it that, from the import of key components in this global supply chain. So, to summarize Dalio's words, he sees that there is an increase in inflation here, especially if there is further deepening of mutual goals rather than political homes, that global production efficiency is reduced, that the value of the dollar is decreasing, which we are already seeing, right? For example, the Polish zloty is strengthening against the dollar. You have the charts in front of you, and it is also being questioned whether the dollar will continue to be a global, stable reserve currency, because the market is concerned about this. Higher prices, greater uncertainty, tariffs can disrupt global trade, causing companies to simply have to pay more for materials and semi-finished products, which may result in these products simply becoming more expensive, and on top of that, uncertainty about the future. Tariffs also make investors more cautious because they don't know what the next steps of individual countries will be. And when economies are uncertain and inflation is rising, investors also start to fear a recession, which leads to declines in the stock markets. And that's exactly why the market reacts so strongly to changes in trade policy. And look at this. It has been calculated that if the average tariff remains at 29%, inflation will likely rise to 5% or even 5.5%. And according to certain predictions, tariffs are expected to broadly impact the entire U.S. economy and in a negative way. Economists are also lowering the GDP forecast for the U.S. for the year 2025. And this is what interests us the most here. The impact of tariffs on the cryptocurrency market, because what happened several hours after the introduction of historic tariffs? Well, Bitcoin, which had previously approached a level of 88,000, fell by over 7% to 82,600. Bitcoin took an even harder hit after Trump's decision was announced. Ethereum fell over 6%, dropping below $1,800 again, and Solana lost 6.5%, reaching around $118. Fortunately, a portion of Solana, about one-third, which I'm also sharing with you, we sold at $260, which is significantly above the current values and very close. All-time high, literally 11 to 12% below it. The rest of it is still somewhere in that portfolio for the Solana bull market. But I'm glad that we managed to realize such a profit because it was bought at $100, so we made a 160% return. And I'm talking about Solana purchased before the next leg of the cycle, which took place at the end of last year, in the fourth quarter. And not about what they used to have and sell earlier, because I only count the latest trades from purchase to sale. You know, Dogecoin dropped 6%, XRP 5%, BNB 4%, Cardano 6%, Tron 2%, so not too bad when compared to Ethereum or Bitcoin itself. You can see that these altcoins have already bled out a bit and practically have nothing left to fall from. And the volatility, which was very strong, was a bit erratic. In both directions, it wiped out both those going long and short. Also within the first day after the announcement of tariffs on leverage, there was just a liquidation of positions with a total value of $490 million. And the question is, how now? These few days? Well, 48 hours. Let's say, after the introduction of tariffs, what does the landscape look like? What is stabilized, structured? What do we see? Well, for now, crypto is swinging solidly. That's the first thing. Once we have sharp declines, then we bounce back a bit by 5% in a moment on Bitcoin or by 3%. We can track this on the 5-minute chart for Bitcoin. In a short time frame, if someone catches on, there's high volatility. We simply see that a few hours before the CEU was implemented, we had a local upward trend, but after the tariff announcement, the market, along with others, experienced a correction. Bitcoin dropped by 7% in 2 hours, hitting a low on Thursday afternoon at around $81,300. Then, for several hours, we saw increases, and Bitcoin almost reached $85,000. One could already think that cryptocurrencies would be doing great amidst all this chaos. It seemed like they had bounced back and everything was fine, until China officially announced retaliatory CEUs. It was simply a roller coaster of events. Thus, once again, after this negative information, we have local declines, and the situation is evolving. You know, a lot of people were praising Bitcoin and altcoins on Thursday because we had a crash on the American stock exchange, and during that time, cryptocurrencies remained relatively stable. However, as they say, one swallow does not make a summer, and it was definitely too early to claim that the worst is behind us. And today, China also came into the spotlight with retaliatory words. And once again, we have blood. Besides that, we have the continuation of the battle on the big stage. Trump once again criticized the Fed chairman, Jerome Powell, today for delaying the interest rate cuts, and Trump wrote that this is the perfect moment. According to him, it's the ideal time for the Fed chairman to lower interest rates. He added a little anecdote, saying that Powell is always late, but now he might finally start acting faster. And Trump, of course, wrote this literally 15 minutes before the Fed chairman began speaking, probably to put pressure on him, if anyone even relayed this information to him, and to create a buzz in the media again. I watched his entire speech and then listened to how he answered questions. The conclusion from this event is simple. For now, according to Powell, it's too early to make any changes in monetary policy, and they will be waiting for more data. He also said that the policy is not as tight anymore. Recently, they loosened it a bit, so you can see that overall, we have huge turmoil in financial markets worldwide. There is a lot of uncertainty, but I still believe it all comes down to one thing. Trump wants to quickly bring about interest rate cuts and QE. Despite the declines and panic, I see positive signs here. Monetary policy is simply being gradually loosened, and the money printers should be started. And all this information, of course, would be useless if I couldn't also translate it into practice as an investor. Basically, what matters is how all these events in the financial world shape our portfolio, what decisions we should make considering what we know. To protect our capital or, as a second option, simply to make a profit. And what am I doing in this situation? Currently, besides shopping, nothing. I watch from the sidelines, add to the longs those orders I mentioned, which I described on Telegram. If anyone is not there, I invite you, link in the description. In fact, all the links are in the description to all my groups and so on, which are free. I don't make any hasty decisions. And despite the fact that the markets are living in fear and uncertainty, I am sure of one thing, simply the crypto market. In the long term, it will do well, and even this year, in my opinion, nothing has changed. I firmly stand by the fact that the bull market is not over yet. Practically no data, whether on-chain, in terms of cyclicality, or in terms of the flow of individual cycles, indicate that the peak is behind us, especially with Bitcoin itself. Also, in the last video on the channel, there was more. If someone didn't see it in the top right corner, I added it literally yesterday, so it's worth checking out if you missed it. That's why a significant part of my exposure to crypto is Bitcoin. When dominance increased, Bitcoin weakened, so Bitcoin is periodically 30% to 40% of my portfolio now. Ethereum is about 20-something, 30% when I add to it, depending on the moment. Altcoins, 18%. Longs, and a little, somewhere in USDT, yes. Periodically. Longs, and orders on longs are another 12 to 13 points in stables. Now, after these purchases, I don't have any more when it comes to adding. Summarizing the exposure in ETH and altcoins, of course, I count those orders that I have lower. If they don't go through, I'll have a lot more in stables. So, the rest of the altcoins are more risky, especially when it comes to those further positions. I think that in terms of risk-reward, I have a balanced portfolio, and some of you probably do too if you're following me. And that's it, really. That's a quick summary from my side. Subscribe to the channel, give a thumbs up so you don't miss the next videos. And we'll hear from each other after the weekend. For now, hold on tight, because the weekend won't be pleasant financially. Probably. But it all passes. Yes, it's programmed. We'll win in August. Take care.